Hey, what's up, Market Moose? Mike from the Moose on the Loose. Welcome to this earnings Thursday. I'm going to take a look at Toromont, TMX Group, Fortis, and Franco Nevada. There are so many earnings coming out every single day. I thought of doing a quick roundup of some of the companies that I have in my portfolio after taking a good break from the Brookfield. So if you have missed this mini series, I did a 3-part podcast / video. So either on the Moose on the Loose, on Spotify or Apple Podcasts, or if you look at the Dividend Guy YouTube channel, you're going to see that on Monday, I discussed Brookfield Corporation and Brookfield Asset Management. On Tuesday was Brookfield Renewable, and then Brookfield Infrastructure yesterday. I actually created a guide to help you understand all the Brookfield. So Brookfield Inside Out, you can download it at moosemarkets.com/Brookfield. I even did a complete Brookfield guide so you understand which part and how it's working, and if there's a good Brookfield for you to add to your portfolio, you can download it at dividendstocksrock.com/Brookfield. All right, so let's get on with the earnings, shall we? The first one on my list, Toromont Industries, ticker TIH.TO, has been on a roll this year. I did an episode about a couple of weeks ago, I think, with Nelson. And don't worry, Nelson's going to come back on the show. It's just that right now I'm in the middle of major renovations. Can't really book anything with anyone at this time, so that's why he's not on the show, but he's going to come back probably in early December. So did a complete episode telling you that we're not done seeing growth from Toromont, and actually, so far, so good. The stock is up about 50%, probably even more actually, since the beginning of the year. Crazy ride for Toromont Industries, mostly driven by the narrative around AI and construction, so kind of makes sense. Ironically, the stock is up by 50%, but the quarter was not that strong. So there are some mixed numbers on this one. So revenue declined by 2% and earnings jumped by 8%. So whenever you see this, you have to ask yourself, okay, so what's going on? If revenue going down and earnings is going up, there must be something here that explain the difference, right? So most of the time is when the company will be able to be more productive, improve their margin, and this is definitely not something that is sustainable. If you see the company showing weaker and weaker revenue, then it's a red flag. In this specific case, you don't have to worry about anything. It was the equipment group that declined by 4% on smaller volume of new equipment sales. The thing is, last year they sold a bunch to the mining industry, so it makes it a bit more difficult in terms of comparison, so nothing to worry about that. The good news though, because there were a lot of good news on this one, Simco is up 22%, and the acquisition of AVL, that they did that not too long ago, that will help them to grow their business even further, did very well. So the booking has increased by 47%. At 1.3 billion. So the current quarter was okay, but what is being forecasted is a lot of growth for Toromont Industries. This is why the market likes it so much. If you want to have the full episode, just go back a couple of weeks ago. We did a full overview on this one. Next on my list, TMX Group did also reported a pretty solid quarter, and this is interesting because the stock price is declining right now, but revenue is up 18%, earnings per share is up 27%. I mean, the business is thriving. Derivative trading and clearing rose 27% on strong volume, and you can bet that there are going to be more volume coming up with all that volatility. Global Insight up 18%, and then you have equities and fixed income trading up by 18%. So everything is up double digit on this one. Super happy to have added it. It's not a big position in my portfolio, but it's a fun stock to follow. Next on the list, Franco Nevada. Franco Nevada reported crazy numbers, and I can already tell you up front that probably that next year at the same time in November, when you're going to review your earnings, you're going to see a revenue decline. The thing is, revenue went up by 77%. Adjusted earnings up by 79%. Kind of crazy, right? Well, of course, the good results were driven by strong gold price. I mean, we're having like a huge gold rush right now. Gold has crossed the bar of $4,000 an ounce. It was even, I think it was like 4,300 at one point. Now more back to that $4,000 an ounce, but still very strong pricing on that. And the other thing that Franco Nevada benefited from was the sale of the existing stockpile that they had at Cobre Panama. So the Cobre Panama mine has been closed for more than a year now. So it closed towards the end of 23, if I remember correctly, by the government, and now they got their hands onto whatever was left, and they were able to sell that production, which is definitely good news because they are selling at a much better price now than they would have in 23 or at the beginning of 24. In terms of like what's going to happen with the mine, they're still under negotiation with the government. It's still not clear how it's going to happen. There are like some talks that are going to be expected towards the end of this year and in 2026. So you're still on the sideline for this one, but overall, the good diversification of this business model for Franco Nevada makes the run a little bit smoother, even though they do not have access to this amazing mine, one of their most important asset in Panama. Finally, Fortis. Fortis, I mean, Fortis is like one of my favorite stock, at the same time the most boring one. It's a company that I could put in a box for 10 years and not even look at it. So when I wake up this morning and then I look at the numbers, what I've seen is, well, earnings per share is up like 2.4%. Not crazy. They announced the 52nd consecutive dividend increases of their history. Nice bump, 4.1%. That was good. It's pretty much business as usual. The thing that I want to highlight here is Fortis is spending more than ever. So they have reviewed their capital plans between 26 and 2030. Now it's up to 28.8 billions, up by 2.8 from the prior plan, and it's expecting to generate 7% rate increase between 25 to 2030. So 7% is pretty good. It should be enough to fuel this constant 4 or 5% dividend increases they offer to shareholders every year. So nothing to lift your portfolio to new highs, but nothing to worry about at the same time. This is the type of stock that I like to have in my portfolio. On the quick news, if you saw the market yesterday, Stella-Jones reported a good quarter as well, up about 5% for revenue and earnings from the top of my head, and the stock price was up about 4 or 5%, I think. So the market liked it. It's doing well. They made more acquisition in the utility pole business, so they are just using their playbook over and over. Very stable. Super happy about this one. And I actually increased the number of my shares yesterday in my Smith Manover. So the $750 a month that I put into my Smith Manover, I used that at the market opening after reviewing the earnings yesterday to buy a little bit more shares. It's not much, but I mean, it's just fun to see a stock going up once you bought it, right? Besides that, Brookfield Renewable reported their earnings, I think was yesterday. Did well, 10% FFO per share up as well. So another one that is doing great. Of course, big focus on supporting AI data centers and providing power to them. Probably going to announce more deals being signed with tech companies over the next few years. Never forget, sorry, that those deals and this narrative around AI is a big trend right now. So just tread carefully. Make sure that not half or 3/4 of your portfolio is geared toward AI, I mean, you could make a ton of money, but if there's a bubble bursting, you're going to take a hit. So just have to take that with a grain of salt. All right, so that's enough for the earnings review today, my dear Moose. Tomorrow, we're going to talk about the opportunity cost of having a cash reserve. I've been telling you about that at retirement. My plan is to have a cash reserve on the side to avoid selling during the downturn. Well, it's not perfect either. There are some flaws to the strategy. We're going to talk about that tomorrow. And until then, don't forget to stay invested.